Alright, so let's talk about Alphabet, or most of us know it as Google. Currently, Alphabet is the number fourth biggest stock in my portfolio. Over there, you can see I've got a 5.67% allocation, which makes it the biggest for position. The biggest position I have right now is Amazon, and number one, number two, Microsoft, number three, Meta, number four, Alphabet, and number five, Salesforce. So you can see that recently Alphabet has broken out of this consolidation pattern, and it is now on an uptrend. So you can see it's been on a downtrend for over a year because of the interest rate hikes and a bear market last year. You can see a very clear change in trend over here. Again, it's all about price action. You've got higher lows, you've got higher highs. So that is an uptrend. At the same time, you see a change in the moving averages. You've got the 50 moving average, the blue crossing above the 150 moving average. Both are sloping up. You've got the 200-day moving average beginning to slope up. And you had that initial level of resistance over there, and it was broken 2 days ago. So we have broken that resistance. It looks like clear skies ahead. We should see a lot more bullish momentum on Alphabet. Now, it's not just Alphabet that's breaking out. You will notice that many of the other mega tech stocks that have not yet caught up, like Nvidia's been flying, Microsoft's been flying, but a few have not been catching up. Alphabet has not been catching up, but now it looks like it's beginning to catch up. The other one is Amazon, which is my largest position. Again, this is not a recommendation to buy any of these. In full disclosure, I own all these stocks. These are my biggest positions, so just bear that in mind. So again, same thing with Amazon. You can see Amazon beginning to break out of that 200-day moving average. You can see that 200-day acted as a bit of a resistance, and it's now broken out of that level of resistance. We've got the 50 crossing above the 150, but the 150 is still kind of like sloping down. So I want to wait for that 150 to begin sloping up and the 200 begins sloping up to really confirm that uptrend on Amazon. But again, these are what I hold for long-term investments. So whether it's a short-term uptrend or downtrend, it doesn't really matter. As long as it's undervalued, I keep adding more shares. So one of the reasons why these mega cap stocks are beginning to break out is because it seems that the war on inflation is over. Recently, was it yesterday or the day before, we had, again, the CPI, PPI coming below expectations, jobless claims going above expectations, which means higher than expected. And all that signals that probably the Fed has done raising interest rates. They are probably done. Their last rate hike was done. And so that gives a lot of bullish momentum to a lot of these large cap stocks that went down last year because of these very, very high interest rates. Now, if you recall, on the 9th of February this year, Alphabet stock really crashed down despite not bad earnings. In fact, they produced pretty good earnings, and in fact, their last quarter was also pretty good. Why did the stock price go down? It was totally illogical because Alphabet is a great business that is really, really undervalued, and it went down for one simple reason: because they fucked up their demo for artificial intelligence. Now, a lot of you who have been following Alphabet would know that, Google, Alphabet, they have been one of the leaders of AI for the last 10, 20 years, together with Palantir. But just because they screwed up that demo, people got scared. Oh my God, Microsoft is going to take over. Google's gone. They are disrupted. And it went down, right? Now, that is great for investors because as an investor, if you really understand the business, and you understand how far ahead they are with AI and how strong their search business is, and you understand their actual intrinsic value, which I've shown before. For example, if you take a look at my latest calculation, this is using a discounted free cash flow model, putting in their latest free cash flow, and then using a projected growth rate, which you can get from many websites. For example, you go on to Finviz, you can see their projected growth rate for the next 5 years is 17.61%. We put in that growth rate over here, and then we assume that that growth rate would kind of like halve in the next 5 years, take 70.61 divided by 2, that's about 8.8%. That gives you roughly an intrinsic value of about $161, right? And even at today's share price, even though it kind of like, looks like it moved up quite a bit in the short term at 116, you can see that it is still 28% undervalued. It's still an underpriced stock. Now, I'm not saying that you should go buy it. It's just sharing for educational purposes how I value a company, right? But it's insane, right? Something that's worth, $160, from 107, which was already undervalued, drops to like $89. That shows you how in a short term the market is totally illogical, it's totally emotional, it's driven by manipulation, speculation, and short-term sightedness. And that's great because as an investor, you take advantage of other people's emotions. You take advantage of other people's stupidity. You take advantage of other people's short-sightedness. And you keep accumulating shares of a great business because eventually, once the narrative changes, the emotions shift, the price would soon reflect what the business is really, really worth. So what's the difference in the company now at $116 versus back in February, which was 3 months ago, at $89? What's the difference? I mean, it's a 30% difference in the share price. But the company is exactly the same. It's the same business. It's the same valuation, but the price shifts so much because of a change in perception. It's all about perception. So again, 3 months ago, they screwed up their demo, but now they just had a new conference, which was their I/O 2023 keynote 2 days ago, and they again now came up a lot better prepared, where they talked about their services, their products, and then people got excited. Oh, they are back! They were never gone. They are back. And that's why it started breaking out, right? But it's pretty interesting. So let's run through the recent keynote and let's look at all the products and services that Google is launching right now. Now, if you are an Alphabet shareholder, do watch the keynote. It's about 2 hours long, but there are some summarized versions on YouTube you can watch for just about 12 minutes. But I must say, as a shareholder and a user of their products, I was pretty impressed. So let's run through some of the impressive highlights and developments. So the keynote started off with them talking about their new Google Pixel Fold phone, which was pretty impressive. Their phone can be unfolded into a tablet. So it's a phone and a tablet at the same time. And what was really impressive was their dual screen interpreter mode.
Dual screen interpreter mode. Your Pixel Fold can use both displays. Both displays.
So pretty revolutionary stuff. Now, of course, what we are most interested in is, of course, the application software. So I'm really excited about Bard, which now is officially open to the public. Bard, of course, is Google's competitor to ChatGPT. So I've been using ChatGPT, ChatGPT 4, ChatSonic, all the other versions. But recently I've used Bard, and I would say that Bard is far superior. So a few advantages that Bard has over ChatGPT would be ChatGPT is not linked to the internet, of course, unless you use the Bing chat, right? ChatGPT is trained on data before 2021. But for Bard, it is connected to the internet, so you get real-time data. So for example, you can go to Bard right now and you can type, who is Adam Khoo, for example, or whatever question you ask. And it comes up with the answer. There we go. The second advantage is that it doesn't just give you one answer, it gives you multiple answers. So you can click here, view other drafts, and it gives you different answers or a variety of answers, and you can choose your favorite draft or combination of a couple of drafts. And it also cites its sources. Unlike ChatGPT, they just tell you the answer. You don't know if it's factually accurate. So with Google, they will then recommend, hey, these are other sources from Google that you can use to verify. The other thing is that there's a voice recognition software where you don't have to type. You can just click on this and ask the same question. Tell me about PLTR earnings results. There, you've got all the information real time. Palantir reported earnings for the first quarter 2023 on the 8th of May. The company beat analyst expectations on both top and bottom lines. Revenue for the quarter was 525 million, up 18% year on year. Company's adjusted earnings per share was 5 cents, beating the analyst consensus estimate of 4 cents. Blah, 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 blah. And so far, I must say that the answers I'm getting from Google Bard is superior to that of ChatGPT or even Microsoft's Bing Chat. And I'm not playing favorites here because, as you guys know, that I've got a bigger position in Microsoft in my portfolio than Google. So they're kind of like two daughters who I love equally, but this daughter seems to be better in AI. Another cool feature of Bard that ChatGPT can do is that it can summarize articles from web pages. So for example, if you go to this web page from CNBC, you've got this whole article on the UK economy growing by 0.1%, blah, blah, blah. You could just copy the whole link, go to Bard, and you can tell Bard, summarize the article from this link. Boom. And there it goes. It summarizes the whole article in 3 sentences. The UK economy grew by 0.1% in the first quarter of 2023, but showed an unexpected 0.3% contraction in March. The slowdown was driven by a decline in consumer spending. There you go. Really useful. Now, Bard is just the tip of the iceberg. What got me really excited is that from now on, I don't have to write my own emails. So I use Gmail, and now they are rolling out a feature called Help Me Write. So they give an example. Let's say your airline send you an email to cancel your flight, and they're offering you some voucher, but you want a full refund. So instead of typing the email, all you got to do is to click create an email and give the points, like I want a refund from the airline. It writes it for you beautifully, right? And not only does it write for you using AI, but you'll pull data from your other emails. For example, it can read your flight number. You don't have to type it in. You'll find your flight number from your previous emails and then write that email for you and reply. Pretty amazing stuff. Here's another example where if you use Google Docs and for example, you want to write a job description for a senior level textile designer. And again, from now on, you don't have to write anymore. You just give a few points and click create. And again, the AI will write it all for you. So it's not just text to text, there's also images to text. You can upload a picture and the AI can then describe the picture to you. It can create funny captions and stuff like that. And what was also pretty amazing is Google is now teaming up with Adobe. Adobe's Firefly, which is Adobe's AI, where you can now generate images, generative AI images through text. So for example, you can, type, or you can say, make me an image of a unicorn and a cake at a kid's party, and you will generate a few pictures for you to choose. So again, think about it. Because of this, a lot of companies that are selling photographs like Getty Images and all that, they could soon become obsolete because you don't have to find images anymore and pay royalties. You can create your own images using generative AI, using Google's new software. Another thing that was pretty impressive was Google Photos. They have this new thing called Magic Editor. So let's imagine you take a picture of your child over here, but you did not center it properly. So part of the balloons got cut off and part of the bench got cut off. So using Magic Editor, you just have to drag this image to the center and the AI would then create the missing balloons and create the missing bench. Pretty mind-blowing stuff. Really impressive, like I said. Those of you who use Google Maps, I use it every single day. They are now going to put in a feature where it's going to also create a 3D fly-through of your route. So don't write Google off too early. They've got a lot of interesting tricks up their sleeve that I think they are even yet to reveal. So if you look at the charts again, on the daily charts, you can see that it's broken out of this consolidation pattern, but it kind of like gapped up really strongly. So sometimes after a strong move, you may get a bit of a retracement back. And again, any kind of retracement could be an opportunity to again add shares before the trend continues up. Now, from a longer term perspective, if you take a look at the long-term chart on Alphabet, let's look at the monthly candles. And what's interesting on the monthly candles is, now again, the intrinsic value is about 153. That was my last valuation. But if you take a look at the latest growth projections, it's about 160. So again, remains fundamentally undervalued. If you look at the charts, you can see, again, remember a great stock, the price does not go up in a straight line. It moves in wave patterns, right? It wave up, wave down, wave up, wave down, wave up, wave down. Now the question is, how do we know where is the end of the retracement? So we can use moving averages as a clue because there are certain historical patterns of support. So you can see, for example, for Alphabet, whenever there's a shallow retracement, it tends to find support at the 20 EMA on monthly candles. Can you see? Wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down. So every time it makes a wave down on a shallow retracement, notice it bounces off the red line, the 20 EMA. Now, once in a while, you see a big wave down. Usually there's a recession, there's a crash, there's a bear market. And during a big wave down, what happens? You can see that was a big wave down during the 2020 COVID crash. It found support at the 50 moving average and bounced off very nicely. And then last year during the bear market, we had another big wave down. And once again, finding support at that 50 moving average, looks like it's bouncing off and looks like it could be heading back up. But again, remember, it doesn't go up in a straight line. You still get ups and downs along the way. And of course, the next area of volatility would be the debt ceiling debacle, which I've mentioned many times before. By early June, the US Treasury will run out of cash to pay the bills of the US government. And if the Republicans and Democrats, they don't find a resolution to raise the debt ceiling, we could get some crazy volatility in the markets. But they always sort it out in the end. So any kind of volatility in the market goes crazy before that because of panic and fear. I see that as an opportunity to add more shares of great companies. Hope this has been useful, and I'll see you guys in the next video. May the markets be with you. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.